Come, let's try and check how much is the financial awareness in my area. Any idea on how much is inflation in India right now? 80%? Oh my god. Second answer we have got for 80%. You invest in stock market?
Yeah.
Yes. Currently in which type of market are we? Bull or bear?
It's a bullish market, but
Bull market.
It seemed like a bull market, but now I think it's more of a bear market.
Do you know what's your net worth? It's idea.
it is 4 lakh.
4 lakh.
No network.
Alright, thank you. Hey folks, here Rachana Ranade here and I welcome you all to a very important video which is about top 10 financial concepts that you must know. So whenever we start our financial planning journey, I think the very first thing that you must know is how much money do you have right now versus what is your target. If you have these two defined points, then will you be able to bridge the gap between these two. Okay, so I'll give you a simple example of how much money I have. It could be either money or something which is money's worth. Okay, so assume I have a Ferrari, a helicopter, an aeroplane, a ship.
Rachana, please control Rachana.
Okay, anyways, example and okay, so and these are worth just 10,000 crores. Okay, and assume that for that I have taken 1,000 crore loan. Okay, then how much money or money's worth do I have? It will be 10,000 crores minus 1,000 crores. Is there any technical term for that? Exactly, that is nothing but net worth in financial concepts. So how do I calculate net worth of any person? Net worth is calculated as assets minus liabilities. Okay, so just to give you one more amazing example, Mr. Mukesh Ambani's net worth, I was reading last month, is just $96.4 billion. That's how it looks like. Now just multiply this with the exchange rate and just count how much zeros there are. It's actually 7,23,000 crore rupees only. Let me remind you all one more time that all these creative people are spammers. That's how my account looks like. Also remember, I never give my mobile number in any chat. I neither have an advisory nor do I give any stock tips. Now here we have Mr. Chandu who is completely charged up. He has calculated his net worth and he has also calculated his target net worth. But oh my god, just have a look at his face. He's worried. He knows that there are a lot of uncertainties that surround him. How can he have a good shield against those uncertainties? Number one, he should buy a life insurance, and number two, a health insurance. In simple words, life insurance will protect his family members if something happens to him. I had to introduce a certain person in our example because otherwise I would have to say that if some okay, anyways, so I hope you have understood the importance of life insurance. Basically, if the main bread earner of the family passes away unfortunately, then the nominee heir will get money so that the family members can survive. Okay, that's a simple example of a life insurance. You can have a life insurance through maybe a term insurance or an endowment policy or a whole life policy. Many types are there, but my personal favorite is a term insurance because it's a pure insurance product. I hate mixing up insurance with investments, right? So I hope life insurance is clear. Second one is a health insurance. Now what if Mr. Chandu, who has come back into picture, Chandu now is absolutely again pumped up because he has the shield with him. He doesn't die, but he falls sick. Okay, then who will cover up for his medical expenses? Okay, it can be the hospitalization expense. It could be about the tests which he has to get himself for. Third could be the post-hospitalization expenses. For that, is there any separate insurance policy? Exactly, that is nothing but the health insurance policy. It also comes with multiple riders which can help you to get yourself covered with many types of related expenses, right? Now with this, I'm sure there is one last question in your mind, that are these very expensive or not? I'll give you a simple example and a simple and amazing website through which you can get yourself insured. The name of the website is policybazaar.com. On that website, you'll get to select from a lot of insurance policies which are available. But just to give you an example, you can cover yourself up to 1 crore rupees with just 411 rupees per month, and you can also get a tax benefit up to 46,800 rupees if you are into the 30% tax slab. The policies also cover COVID-19 protection, and also you will get a protection up to 99 years of age. Well, this was about term insurance. But then what about health insurance? Even on the same website, policybazaar.com, you can get up to, whatever cover you want. But if I'm giving an example of 5 lakh rupees health insurance, you can get that with just 200 rupees per month premium amount, and tax benefit will be up to 75,000, of course, provided you are into the 30% tax slab. Policy Bazaar people claim that their specialists will come to your home or to the hospital within 30 minutes to support your health insurance claim. Just in case if you don't know about this, Policy Bazaar earlier was just an insurance aggregator. Now they are an insurance broker. If you don't know about these two terms, then you can surely check out this video, which is about Policy Bazaar IPO. I've also covered in detail what is term insurance, what all things you should know about term insurance in this video. And if you want to know more about health insurance, this is the video in which I've covered everything about health insurance. Have a look at Chandu's face, huh? So happy he is. Why? He has protected his life, he has protected his health also. But what if Chandu loses his job? What if certain unplanned expenses all of a sudden pop up? Then what? Isn't he a bit worried now? Don't worry, Chandu. For that, I'll tell you what is the solution. For that, a person like Chandu or anyone ideally should have an emergency fund. What's an emergency fund? It's a pool of fund which you keep aside to meet for unplanned expenses and unplanned things that can happen in your life. Example, loss of job. How much money should you have in that emergency fund? That should be nothing but 6 months of your expenses. Just as a quick example, assume that I spend 50,000 rupees per month. I should have an emergency fund of 50,000 multiplied by 6. That is 3 lakh rupees in the emergency fund. But where should I park that money? Should I keep it in cash or in a saving bank account, or what is exactly what we're going to talk about in the next part of the video. Well, now we know very much about what is an emergency fund. But the question is that this emergency fund money required, where should I park it? Can I park it in cash? Yes. Can I park it in saving account? Yes. Can I park it in fixed deposit? Yes. Can I park it in a liquid mutual fund? Yes. Now, all these 4 assets that I talked about right now have a certain characteristic which is inbuilt around all of them. Which is that characteristic? That is nothing but liquidity. It has got nothing to do with solid, liquid, gaseous or something like that. Okay. Liquidity, simple words, means that any asset which can be easily converted into cash. Simple. Now, I'm sure everyone knows what is cash, what is saving account. Fixed deposit also, you can easily convert into cash. You'll have to bear a penal interest, but you will get the money quickly. But what's a liquid mutual fund? That is one small point I would like to tell you. Liquid funds are class of debt funds that predominantly invest in high quality fixed instruments that mature within 91 days. But where does your money get parked in a liquid mutual fund? That gets parked into instruments like certificate of deposits, treasury bills, commercial papers. But if you want to know more about liquid mutual funds, that's the video that you can refer into, and I hope you have understood what is a class example of liquidity. Well, the next financial concept is also very important because that can really pull you away from your target net worth. And what is that concept? That is inflation. In simple words, mehengai, Marathi, Mahagai. Okay, so I'll give you a very simple example on what is inflation. Assume that this fruit basket was costing you 100 rupees a year ago. And today, the same fruit basket is going to cost you 120 rupees. What is the inflation? It's nothing but 20%. As simple as that. Okay. If I talk about the real data in India, then have a look at this chart. Earlier, way back in 90s, the inflation used to be around 13.48%. Then it started cooling down, and lowest point you can see in the recent past is somewhere around 2016 to 18. You can see it was as low as 3.6%. Right now in 2020, 2021, somewhere around our inflation as per the latest data is around 5.56%. Okay. Now, why is this figure important for me? This figure is important because I have to compare my investments with inflation. If my investment is giving me 4% return and if inflation is at 5.5%, am I going to get a real return or no? Answer is no. So I must ensure that the return on investments is higher than the inflation rate. I hope you have understood the simple concept of inflation. Now that you have understood what is inflation, now you're really interested to know that how can I find out an asset class which beats inflation. For that, you have to know a very important term, which is returns. For a layman, for CAGR viewers, it is CAGR. Okay, what is CAGR? Compounded annual growth rate. And first, let's understand the simple definition of CAGR. It is the rate at which an investment grows from the beginning to the end, assuming that the profits were reinvested at the end of each period of the investment lifespan. Okay, very simple, right? Now have a look at this formula. FV divided by PV raised to the power 1 by N minus 1. So definition was easy. Formula was simpler, right? No? Okay. Chalo, theek hai. Have a look at this example on CAGR, and I'm sure by the end of this example, you'll be like, yes, kalda hai mala aata. Okay. Chalo. So you can see period 1, 2, 0, 1, 2, 3, 4, 5. What is period 0? It means today. Okay. 0 generally is today. 1 at the end of first year. 2 at the end of second year. Okay. 0, 1, 2, 3, 4, 5. Years are given, and we are also talking about revenue, or let us say investment amount. Whatever can be replaced with that. So in simple words, what has happened? Today, that is year 0, period 0, I invested 10,000 rupees. At the end of year 1, this 10,000 became 12,000. Okay, at the end of second year, it became 13,500, and so on and so forth. Now, if you check out the growth rate column, you will see that at the end of first year, the rate of return was 20%. Second year, 12.5%. Third year, minus 7.4%. So you'll be like, instead of giving all these different numbers, can't you give us a single number which is a representative number, and you say that over a period of last 5 years, this investment grew on an average at this rate. Correct? So this representative figure which talks about on an average this investment grew at XYZ rate is nothing but CAGR. So from the beginning of the period to the end of the period we are talking about. Okay, that's how we are going to calculate CAGR. But then comes a big problem. Are we going to put all these figures in the formula? Not required. Just visit my website rachnaranade.com. Then you can go to the calculator section. Once you enter that section, you will have to click on that CAGR wala calculator. In that, what you have to put up? You have to put up the initial amount. In our example, it was 10,000. You have to put the amount at the end of 5 years. That was 16,500. Then you have to put out how much number of years. In our example, it was 5 years. And what is the answer? Exactly. That's the answer. Is this number beating our inflation figure? Yes. If that be so, I personally believe that, okay, this can be an investment avenue which is giving me a real return. Okay, so CAGR can be used for two purposes. Possibility number one, comparing the returns of an investment with inflation, or comparing the investment returns, comparing the returns of one investment avenue with another investment avenue. Now that you know about the concept of CAGR very nicely, can you tell me a specific asset class which has given an amazing CAGR, a good return over the past few years? Has to be the stock market, right? But the moment I use the word stock market, there are two terms which you can quickly recall. One is the bull and one is the bear. So bull basically signifies a rising market where prices are continuously rising. It's as good as you buy today, today morning, you sell in the afternoon, generally you will make profit. You buy today, you sell tomorrow, you'll generally make a profit. You buy today, you sell after 1 week, 1 month, whatever, you'll generally make a profit. Okay, that's a classic example of a bull market where prices are continuously rising, and most happy are retail individual investors. That's the frenzy in the stock market. Everyone wants to participate in this rally. The second one is the bear market, where it's a danger signal where prices are continuously dropping and dropping and dropping. Just to give you a proper definition of a bear market is that if the market falls by more than 20% from the highest point, okay, then it will be called as a bear market. A simple mathematical example can be, let's say highest point of the market is 100 and the stock market goes below 80. So it has corrected by more than 20%, then it is an example of a bear market. Okay, so have there been bull runs in the past? Yes. Have a look at this chart. 5 bull runs till now. the craziest bull run, which you can see like a sharp straight line, as good as a straight line, 91-92. And I'm sure everyone knows, credit goes to Mr. Harshad Mehta, right? So that was the craziest bull run. One of the longest bull runs was 2003 to 2008. Right now, are we in a bull run? Answer is yes. Since Corona, the prices which dipped to a crazy low levels, I guess somewhere around 22nd or 23rd March, since then, Nifty has been on a continuous ride, and all the research analysts believe, to some extent, little bit even I believe, that right now India is in between of a crazy bull run ahead. I believe that 2020 to 2030 should be like a golden bull run for the Indian stock markets, right? This was an example of a bull market. What about an example of a bear market? Immediate rise of Harshad Mehta, 91-92, crazy fall in the immediate next year. Markets fell by more than 50% within a year, okay? Second crazy bear market was in 2008 when Nifty dropped around 6,130 points to 2,750 points. So that's like a crazy fall of almost 55% in a single year, okay? So I hope the moment I talk about a bull or a bear, now it's very much clear into your mind what are these concepts and what are the examples related to these concepts. And I'm sure now many of you are fully charged up that yes, Rachana is saying that we are in the midst of a mega bull run. Plus, I did a video just 2-3 days ago wherein I said that can Nifty cross 20,000? And I've tried to prove you mathematically through technical analysis, everything, that yes, there's a great chance that Nifty might cross even 20,000. So you are like fully charged up that yes, I'm going to invest in stock market right away. But wait, there is one concept that you must know again, and that is the concept of risk tolerance. Now, what is the meaning of that? Risk tolerance refers to the amount of risk an investor can tolerate to achieve an investment goal. Okay. I should be absolutely okay even if my investment goes down. I should be able to sleep peacefully. If I'm able to do that, I'm investing in something wherein I have a risk tolerance towards that. So I can say there could be two major types of investors. One could be like an aggressive investor. One could be like a risk averse or a conservative investor. If you're a risk averse or a conservative investor, stock market is not for you. But if you're like a moderate risk taker or an aggressive risk taker, then surely you can consider parking some funds into stock market. But then the big question is that how will you calculate your risk taking capability? For that, I've made this video. You can also check out the I button. First, you can check out this video, understand what is your risk profile, and then take a decision whether you want to invest in stock markets or not. And the final concept is asset allocation and diversification. I'm sure everyone has heard about this quote that never put all your eggs in one basket. Similarly, never put all your investments in a specific asset class. So some should be allocated towards equity, some can go in bonds, some in mutual funds, some in crypto maybe, right? So I want you all to tell me in the comment section where all have you invested your money in. Don't put in the amounts, okay? You don't want others to know about how much you have, right? So let me know about where you have invested. Also, let me know if I were to make a separate video on ideally how much should be your asset diversification, in which asset class you must invest, how much percentage of your total portfolio. Well, I hope you have understood and enjoyed these top 10 financial concepts that one must know. And if you have, don't forget to share it with your top 10 friends or any 10 friends. Till then, take care. Jai Hind and bye-bye.